And of course, Neil Melancon with the bottom line is going to be talking about that report. Neil, any surprises in the numbers?
Not too many, Mike, in this particular report. Overall, it was a fairly neutral one. It was slightly positive for both corn and beans and a little bit negative for wheat. First up, let's take a look at the month-to-month numbers. And as you can see, the 09-10 crop carryout is fairly steady for corn and beans and very close to trade estimates. The one exception for this is wheat, where there was a much larger carryout than projected back in May and well outside the trade estimate range. A much more telling picture is to look at the year-by-year carry-ins, and that is the amount of grain brought in, which paints a picture of dwindling soybean stocks. And just 2 years ago, the carry-in was around 574 million bushels compared to 205 last year, and now 110 million this year. Carryouts for this crop are expected to be double that, but not all the soybeans are in the ground, and the crop is yet to be made. Corn carryouts, meanwhile, are much the same for the past couple of years. The carryout has been around 1.6 billion bushels. This year, it's projected to be cut by a third as ethanol and overseas demand kicks back up. The bottom line this week is we're back to wait and see, especially for the very telling June 30th acreage report, the first actual crop in the ground numbers we'll see this season. The feared shortfall due to planting delays has largely fizzled, with almost all the corn in and soybeans nearing 90% done. And what this will mean, Mike, is likely a lack of fundamental news until then, and we're going to trade on oil and the dollar.
What about the outside markets, Neil? How are they reacting?
Well, oil is climbing back up to $70 a barrel, and the dollar is reaching back to its 6-month low. So that's good for crops in the short term, but not so good for our overall economy.
Neil Melancon, thanks.